Hey everyone, it's Julie here with TipRanks, and today we're taking a look at two strong buy stocks that have analysts raising price targets. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at two companies that come in with a strong buy rating from Wall Street analysts and have recently seen analysts increasing their price targets on the stock. We're going to take a look at these companies, what it is that they do, and what has analysts feeling more bullish on their future outlook lately. We found today's stocks using the TipRanks Daily Analyst Ratings page. Found underneath the Tools menu, here you can stay up to date with all of the latest ratings from Wall Street. I narrowed it down to 5-star analysts with a buy rating and found some stocks that had some increased price targets. Just before we get into today's stocks, this is a friendly reminder that if you enjoy the video, make sure you hit that thumbs up button and that you're subscribed to the channel. You can follow along over on the TipRanks website or by downloading the TipRanks mobile app. Links to download are in the description down below. Now let's jump right into our two strong buy stocks. First up, we're taking a look at Baker Hughes. They trade under the ticker BKR, currently priced at $47 per share. This is a stock we've talked about before. I believe it was around August, September most recently. In the past year, it has climbed 68%. In the last 3 months, has gained 24%. They do currently score a 10 out of 10 on the TipRanks Smart Score as well, with some increased hedge fund activity and very positive crowd wisdom. Baker Hughes is an energy technology company with a wide range of products and services for the energy and industrial sectors around the globe. Operating in over 120 countries, Baker Hughes combines global scale with local expertise to meet their customer needs, adapting solutions to regional market conditions. With their oilfield services and equipment, they offer products and services for onshore and offshore oilfield operations through the life cycle of a well, and their industrial and energy technology provides solutions for industrial and energy markets focused on areas like liquefied natural gas, turbo machinery and process solutions, and digital solutions. Just today, Baker Hughes announced that they were selected as a technology partner for a new facility. They were selected by Argent LNG for their proposed liquefied natural gas export facility in Louisiana. Baker Hughes said they'll supply liquefaction solutions utilizing their NMBL modularized LNG solutions powered by the LM9000 gas turbine and a multi-year services plan for the facility. This announcement closely follows their fourth quarter and full year earnings that came out last week on January 30th. The company had an earnings and revenue beat, plus set new quarterly and annual revenue records. They reported fourth quarter earnings per share of 70 cents, beating analyst expectations by 8 cents per share. Revenue came in at $7.4 billion, which did grow 8% year over year, beating estimates by $330 million. For the full year, they had revenue of $27.8 billion, which was up 9% year over year. That revenue was a new quarterly and annual record, and they also set records for their free cash flow and adjusted earnings per share, EBITDA, and EBITDA margin. They saw strong orders and growth in new energy and also announced a 10% increase to their dividend with record annual free cash flow of $2.3 billion. For 2025, they're expecting total company revenue of $27.75 billion. Just today, we've had quite a few analysts reiterating their buy ratings and increasing price targets, one of them coming from Argus Research. They said their higher earnings primarily reflected earnings growth in both of the company's two business segments, along with positive price action and benefits from continuing cost reduction programs. They're assuming continued strong drilling activity in international markets, partly offset by flat growth in North America markets. We also heard from an analyst at RBC Capital. They said the company's results demonstrate the strength of the cycle beyond the LNG market, while the management's self-help efforts support continued margin expansion. The Baker Hughes stock has 22 current analyst ratings and comes in as a strong buy with 20 buys and 2 holds. In just the last few days, there's been over a dozen analysts who have increased their price target on the stock. And the average price target currently comes in at $52.77 for an upside potential of 11.6%. Looking at the ratings down here, you can see all of those analysts bumping up their price targets. On the low end, we do have a price target of $45, which would be a slight downside here of nearly 5% from back near the start of December. While more recently, our high-end price target, we have a few here at $57 for an upside of 20.5%. And the second stock that has been gaining analyst attention lately is GE Aerospace. They trade under the ticker GE, currently priced at $204 per share. This is another one we have talked about before, most recently at the end of November. Overall, in the past year, the stock has gained 87%, and in the last 3 months is up 19%. They currently score a 9 out of 10 on the TipRanks Smart Score with bullish blogger sentiment and very positive crowd wisdom. GE Aerospace is a global provider of jet and turboprop engines, components, and integrated systems. They deal with commercial, military, business, and general aviation aircraft. GE Aerospace designs, manufactures, and services a wide range of jet engines from commercial airlines to military jets. And with a significant portion of their revenue coming from services, they also offer overhaul and maintenance, upgrades, enhancements, and parts supplies for these. They're also known for their investment in research and development, working towards a hybrid electric propulsion engine. They shared their fourth quarter earnings report last week on January 23rd, and following that, the stock hit a 24-year high. They had an earnings and revenue beat, plus announced a new share buyback program and a notable increase to their quarterly dividend. In their fourth quarter, they also saw record orders and revenue growth, with orders increasing by 46% and revenue growing by 16%. They also saw strong free cash flow, increasing by 21% during the quarter. For their Q4, they reported earnings per share of $1.32, beating analyst expectations by 28 cents per share. Revenue came in at $9.88 billion, beating estimates by $410 million. For the full year, they saw total orders of over $50 billion, which was up 32% year over year. GE also announced a $7 billion share buyback program and a 30% increase to their quarterly dividend. And once again, weighing in on the stock was an analyst from Argus Research. They said that since the restructuring, GE Aerospace has been focusing on improving its supply chain by working closely with suppliers, and these efforts have meaningfully improved the availability of components for the company, translating into higher sales and margins. Also raising their price target was a 5-star analyst from Citi. They said the company delivered strong results in the fourth quarter and that they view GE Aerospace's strengthening backlog as encouraging. In the past couple of weeks, 9 analysts have increased their price targets on the stock, and overall there are 14 ratings, coming in as a strong buy with 13 buys and just 1 hold. The average price target comes in at $230 per share for an upside potential of 13%. And looking at those ratings down below, a lot of double-digit upside potential. Our low-end price target is $210 here for an upside of 3%, while our high-end price target, once again we have a couple, at $250 for an upside of over 22%. So that is a quick look at 2 stocks that Wall Street analysts have been recently increasing their price targets on. Let me know your thoughts on these companies in the comments down below and whether they were on your radar or not before. I always love hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, so please make sure you always stick to your own investment plan. Thank you guys so much for watching. I hope you have a great day, and I'll see you back here next time.